we're, as Tim mentioned, ASX listed, also TSX Venture as of about a year and a half ago. And our assets are in British Columbia and in Ecuador. And I'll tell you a little bit about the whole story. Here's our disclaimer. Please refer to our February 14th MD&A for full risk factors. Aussie company, 237 million shares, not very many at all. Lots of liquidity in Australia. Currently about 90% of our shareholder base is in Australia. We're working on getting more Canadian sort of shareholders. And we've done several raisings, both gives us the ability to tap the Australian market and the Canadian market. And we've done a lot of flow through. We have some institutional investors on board that are based out of Asia and Europe. Let's just go and paint the picture of what Tempus is all about. We're an exploration company. As I mentioned, we have gold projects in southern British Columbia and in Ecuador. They're very, very high grade. That's one of the differentiating factors. And we also have some combined infrastructure I'll go into. But, we're aimed at creating value, fast track to production. This is a scenario where we're not just looking for a major to come and take us out, although, we're always open for a deal, but this is really a plan to bring this into production. And we'll talk a little bit about the sort of scale there. We have an established sort of leadership team in Australia. Some of the Australians may know Alex Molyneux. He's involved as our chairman. Alex and I worked together in banking for a number of years. And there's a number of sort of TSX and ASX plays in the group. As I mentioned, we have a strong shareholder base, building up the retail side of things. Let's just dive into the project. This is the flagship project. This is where we spend 80% of our time and funds. And one of the things I really liked about it is the location. This isn't 2,000 or 3,000 kilometers from Vancouver. This is about 250 kilometers from Vancouver. So I tell the Aussies, I say, well, you know where Whistler is? They say, oh, yeah. I said, just drive another hour and a half and you're there at the project. So it's road access. It is at some elevation, 1,400 meters. And it's effectively, as you can see here, our two projects there. There's quite large scale in land area. There's 315 square kilometers between the two projects. And they're really two projects that are joined together. And this is the first time they've been under one clean ownership structure. So we're currently drilling at Elizabeth, which we'll go into a little bit more. We have Black Dome is a mining license. We have an existing mill with a low restart cost and an existing tailings dam. Fully permitted. We've just done their 5-year closure plans, everything else on that. So that is a key sort of advantage. So while we're doing the exploration and coming up with a mineable resource, we're also ticking some of these boxes in terms of development. But, one thing I like about it, the natural comps for us, as you can see here on the map, Talisker surrounds us. West Haven's not far away. We have Endurance Gold. The Blackstone Minerals, another Aussie company, are there. So there's a lot of synergies, both operationally and corporately, down the track, which is, I think, increases optionality for our shareholders. A little bit more, Elizabeth is a mesothermal orogenic deposit. We think it's very similar to the Braylorn mine, which is 30 kilometers away, which Talisker is focused on. That was mined, produced 4.2 million ounces of gold down to 2,000 meters over a period of 70 years. We think we have something similar. So we acquired these projects from Skeena Resources. They were non-core for Skeena, because Skeena is focused on Eskay Creek. And there was an existing resource, 206,000 ounces at a grade of 12.3 grams. And that was done in 2009. We're in the process of updating that resource right now. And we've done 80 more holes of drilling that Tempus has done. And combined with a little bit of drilling that was done in 2010-11, there's 129 new holes of information, which is going to upgrade this existing resource that had about 70 holes. So Black Dome, again, is on the north side of this. That's where the mill is. It's 30 kilometers as the crow flies. You can see a little dogleg off to the side of these claims, a contiguous group of claims. That's a haul road. It's about 80% complete at the time. Black Dome was operated for a very short period of time, 1985 to 91. I remember the gold price then, about $3.50 an ounce. They were mining a 12-gram resource at a 22-gram a head grade, so they were pulling the eyes out of it, I would say. So both these projects, we will have a updated resource on both Elizabeth and Black Dome, and it's in process right now. So here's a plan view of what this is. It's a large porphyry plug that is hosting, is black granodiorite, hosting subvertical quartz veins. Now these veins vary between 1 and 5 meters, and we have some larger intersections. But when we acquired this at 206,000 ounces, you can see the southwest vein kind of in the middle of the pack there. That's all they had, and that's what, it wasn't Skeena that did the drilling, it was a predecessor, Sona, that they acquired. And they'd focused on that, and there's about 140 of that historic 206,000 ounces in that one southwest vein. So we've been drilling on it for 2 years now, a little over 2 years. We initially focused on the southwest vein, and with the idea of increasing that inferred to some indicated and increasing that sort of resource. These are about 4, each of those veins we've delineated the structure over about 400 or 500 meters in strike here. But the one thing is, as I mentioned, when we acquired it, there was a west vein, the main vein, and the southwest vein. We've discovered 3 more veins on here, and we think we have a couple more. So we started drilling the blue vein, which was just a blind hole. It didn't outcrop last year. We hit 32 grams over a meter there. We announced, you'll see some of the intersections, but it's spectacular. We had 28 grams over 28.5 meters, grades up to 1,500 grams per ton, and it's consistently sort of high grade. And one of the things you see on, I guess it's to the left-hand side of the screen here, we have this blue vein and the number 9 vein. We have 10 holes in there, and the blue vein, out of 35 holes in the blue vein, 10 holes in the number 9 vein, over 10 of those have over 1 ounce per ton sort of intersections. And as you can see here, what we're seeing in those, in the drilling we've done last year, and we just announced the final results just a couple of weeks ago, is that number 9 vein and this blue vein are coming together, and so that's a target area at that sort of junction. And at this point, we think the number 9 vein is basically a spur or a blowout off of the blue vein structure. But I'm a mining engineer, and I have a lot of underground mining experience with contractors, and mostly in gold mines. I look at this, and I like the spacing of these veins. They're about 120 meters apart. I like the host rock conditions, the clean contact. So from a mining perspective, it's very simple. And this is a mountain. You'd be driving in at the bottom effectively, and so we're not sinking shafts, or it will let gravity do our work for us. So we have vein widths where, like I say, we'd be looking at a mechanized, sort of likely underground mining. This gives you a different perspective in a sort of long section here. So as I mentioned, when we first started, we had the southwest vein, the west vein, and the main vein. That was it. And so all these veins are about 120 meters apart, like a sort of Riddell-style spacing, which is nice, sort of compact. Now, this is on a very small overall area on this project. Like I say, it's a very large sort of land area. But, our current resources, the vertical bars on this chart are 100 meters. So we're just starting to sort of scratch the surface. This upper and lower portal, they were old exploration drifts, track drifts, 5 by 7 foot. They were done in the 1940s. We may access that for underground drilling at some point, but I think we're starting to it'll be very interesting to see what our resource is in the next couple of months on Elizabeth. There's a lot of numbers on here. I'm not going to go through them, but just to sort of highlight, these are very typical grades for what we've had and widths. This southwest vein, which hosts a majority of the resource, none of this drilling is in that existing historical resource. So, there's 55 grams over 5 meters, 71 grams over 5.5 meters. I like the numbers. Blue vein, which we discovered, We're up to 500 grams, 300 grams. The width varies. It is nuggety, where it's orogenic sort of style. So, we're seeing the structure in all the holes, and we're seeing a lot of sort of high grade. Here's this number 9 vein. There's our 28 grams over 28.5 meters. We're still trying to figure out what the true width of that is, because we need to put more drilling into it. But it was drilled perpendicular to the strike direction. So we think it may be just a blowout sort of cavern there. And then the last drilling we just found was this west hanging wall vein, where we have one hole that's in between the southwest vein and I could go back. How do I go backwards? You see it right here, the west hanging wall vein. We just discovered that, and it was 1 meter at 14 grams. So these are areas that we're going to focus on. We have about 10,000 meters of drilling planned for this year. We'll be focusing on that extension to the number 9 in the blue vein, and drilling out this west hanging wall vein, and seeing if we can find some additional veins here. So now here we did aeromag on this at the beginning of last year, and one thing we found, the red is all ultramafics. You see the mag lows in the blue. There's this is a very, on this Elizabeth is 115 square kilometers, and our Elizabeth Main, that's where we're just talking about drilling, is a very small part of it. With a bigger team, I'd like to send a team out to get some soil samples, stream samples, and some of these targets. Elizabeth East there, that's a soil anomaly that we found that had a sort of high grade, a couple grams on surface as a soil anomaly. So there's a number of sort of targets here, and because of the scale of it, we also get interest from the majors. Because as you saw on a previous map, we have Barrick beside us with a porphyry target called Poison Mountain, which is an exploration play. But what the geophysics told us is that the porphyry plug is much, much larger than we previously thought. This is to scale. This is GIS. So you can see we talk about the analogy with the Braylorn mine, and I don't push it too hard because we're a long way from 2,000, these veins going down 2,000 meters, but it certainly has the potential. It's the same rocks, it's the same geochemistry in the rocks we're seeing. And this porphyry is hosting all of this. So I think there's certainly a lot of scale. We're just starting to scratch the surface, 200 meters down. And we're going to keep stepping out those holes. So let's switch to Black Dome a little bit. Look at the mill. This is the mill, the way it is right now. We have estimates on the replacement of that mill, $60–70 million. This mill, it only ran for 5 years. It's a simple gravity mill with some small float cells on it. Sona at the time were selling a gravity concentrate, getting about 20% out of the gravity, and then they were selling the float con to Sumitomo at Mount Poly at the time. This is a long time ago now, but the mill has hardly been used. So we've already done a detailed study of this mill. The ASX doesn't allow me to put that out until I have a resource, even though I tell them this mill is on a mining license. We own that. Anyway, that's a different debate for another time, but we'll be, as soon as we put out the resource statement in the next couple of months, we'll be rolling out with the restart costs, capital and operating costs and capacity of this mill. So it's about 200 ton a day. And, we're targeting a resource grade similar to the historic resource grade of about 12 grams per ton. So if you do the math there, this mill has demonstrated recovery about 95% in total. That would produce 25,000 ounces of gold in its current capacity. We've looked at the addition of a IRL type ILR type cyanidization circuit in a gold room, so we can produce 100% doré on site. It's too early to get into the sort of cash costs and things like that, but we have that milling information. We have the op costs is very attractive. The mine is a simple mine from a mining point of view. So, we're targeting a scenario that you could start this with a sort of 1-year payback is the sort of target here, and a very nominal amount of capital. And if I can produce, 25,000 ounces of gold, hey, that means I'm not issuing shares for exploration. Black Dome, which is the other mine that operated. We haven't really touched it too much yet. We did 5,000 meters of drilling while we're waiting for the permits at Elizabeth. This is an epithermal setting. It's only been mined, like say 330,000 tons, mined down to about 200 meters. We had a famous epithermal guy come out, Jeffrey Henningsquist, who several of you might know, looking at the quartz textures and things like that. He's opining that, we're high in the system here. We will do some follow-up drilling at Black Dome, because we've also looked at that mill in terms of expanding that to 500 tons, and that would be feed from both. I'll touch briefly on Ecuador. These are the initial assets we acquired right after sort of listing. They're in a fantastic location, southeastern Ecuador, in a line along with major porphyries like Mirador, Warencia, St. Barbara. We're Rio Zarza. We have two projects there, Rio Zarza and Valle de Tigra. Rio Zarza is the contiguous to the Lundin Gold's Fruta del Norte claims, and we think it's a down thrust extension of that. Valle de Tigra, we've done soil sampling, geochemistry. We're basically getting these to a drill-ready stage, and then we'll be likely doing something strategic so we can focus on Elizabeth Black Dome. So what I mean by that is, farm that out, keep a royalty, keep some participation. This is the Rio Zarza extension of Fruta del Norte. They're deep holes, 2,000 meters. I'd like someone with deeper pockets to drill those, and we'll retain some of the upside. Just summary, where we're at. We're in a great location. It's a definite plus. We have real near-term production potential because of these tailings dam, and the mill is fully permitted. It's a notice of work to turn those back on. Over the next couple of months, we'll be starting up drilling in May, which will be a combination of exploration and infill drilling. We'll have a resource estimate, we'll have the plant study, and then we'll be ticking some more of the boxes on the pre-feasibility PEA with the idea of it needs another year to drilling that we could be looking at a production decision in that sort of time frame. So, then we have the upside in Ecuador, as I just discussed, and I think we're at a very attractive valuation, our entry point. So anyway, that sort of sums it up. Thank you for your attention.